Welcome to Closing Day. Closing Day is a real estate show that covers everything about real estate right for the first moment when you're maybe sitting in the basement of your parents' house thinking, maybe I should get out of here, all the way up to the point when you finally own a house. It's closing day, you've got the keys in your hand. My name is Jeff DelGrande, I'm your host today, and what we're going to be covering is there's people that don't think they can get into a home for one reason or another. Might be the financing, might be their credit. And we have a solution for you. And today I have with me Brandon Shaw. And Brandon is a rent-to-own specialist and a debt consultant. Brandon, welcome to the show.
Thanks, Jeff. It's good to be here. Appreciate you having me.
It's great having you here. Now, Brandon, this is something that's a bit unique. And I'm wondering, why did you get started with those type of unique segments of the industry?
Yeah, it's a good question. I've always been interested in real estate and investing in real estate especially. Over the past several years, I've gotten into owning some properties and that sort of thing, and I thought, hey, it would be really nice to share this experience with other people. Yeah. So I started learning more about different ways to get into real estate, and rent-to-own came up as one of those sort of unique ways, as you pointed out, where you can really help people who don't necessarily qualify the traditional way,
right.
And still make decent returns as an investor at the same time. So what really spoke to me about rent-to-own was being able to stay within that realm of real estate investing,
yes,
but helping people who actually really need it at the same time achieve their goals and get them on solid footing in the world of real estate.
Right, so someone who might be stuck in the rental industry for the next 5, 10, 20 years can come to you and through your company possibly say, it's not actually own that piece of real estate, but get into that piece of real estate they're going to own today.
Mm-hmm. Yeah, okay. Exactly. Rent-to-own, it's really the best option for people who are eager to get into their next house now. It's a longer term house. Yeah. But they, as you pointed out in the introduction, they're just missing qualification for the conventional mortgage for one reason or another. Oftentimes, we see that the down payment is too small, right, for lenders to accept. The credit is a bit too low, so maybe their credit has been bruised for a number of reasons. Yeah. There's previous bankruptcies, more consumer proposals, divorces are another reason that people will get into financial difficulty. Unfortunately, yes. Yeah. A lot of times people are self-employed. Yeah. And they don't have the income that is necessary on paper for the lenders to secure a mortgage for them. So for whatever reason that they're missing out on that mortgage, rent-to-own is an option for them to get into that long-term house now while we bridge the gap for them between renting and owning. So it is, as you said, it's unique, and there's a lot of moving parts to a rent-to-own. It has to be done the right way, which I'm sure we'll get into. Yeah. But certainly if it's done properly, it can be a quick and effective way into a home ownership situation.
Yeah, I think it's a brilliant idea. Mm-hmm. So let's say I'm interested in a rent-to-own. For whatever reason, I just won't qualify for a mortgage. I can't actually go through the real estate channel and buy a home. Mm-hmm. What steps do I have to go through?
Well, what would usually happen is you'd probably go to your bank first or a mortgage specialist, which a lot of people do. People that are looking at rent-to-own generally have been shown the door, unfortunately, by those institutions. Yes, and they're looking for the next option. So when we come across individuals like yourself, let's say you're looking for that rent-to-own solution, we would qualify you the same way as you'd need to qualify for a conventional mortgage. So we'll look at your income, your employment situation. We'll look at your credit, your score and what's on your report, your debt load, all those sorts of things. And then from there we'd be able to determine two things really. One, do you qualify for a rent-to-own program based on all that? And two, how long of a term will you need to become what we call mortgage ready, meaning you can qualify for the conventional mortgage. And if you do qualify, what we'll do is we'll bring you in and we'll meet up and have a face-to-face discussion, and we'll go through more of the details, the finer details of the rent-to-own process. Some of the numbers that are going to be key for success. So by numbers, I mean your rental amounts and your down payment savings and all that sort of thing. And we'll go through some of the processes involved in the rent-to-own to make sure that you're fully on board with the program and that you fully understand what's entailed. Because the worst thing that can happen in a rent-to-own situation is you jump right in too quickly and then you realize maybe halfway through or even a year down the road that this isn't the program you thought it was, and you have the potential to leave a lot of your time and money on the table if you walk away. So we are in the business of making people into homeowners, and we mitigate the risks of people walking away at all costs. So we do that by thorough screening up front.
Yeah.
Okay, so once you do qualify and you're on board and you want to proceed, what we'll do is we'll start looking for a house. You'll be able to look with a licensed realtor, obviously. And it could be your realtor, or it could be, if you don't have a realtor, then we have a healthy stable of realtors that will help you to find that house.
Yeah.
And the house, of course, needs to meet certain criteria, which we'll talk about. And then once the house is found and we can secure it at the right price, you essentially move into that house. We have an investor that will purchase it. You will move into the house as a tenant in the traditional sense while we work with you to become mortgage ready. And then at the end of your rent-to-own term, you purchase that house and it's yours.
That's great. So you really set up the expectations, because that's the worst thing when someone gets into any type of deal. They have one type of expectation in their mind, and there's a different outcome. It sounds like the way you're laying it out, the end result is figured out and planned at the very beginning.
Exactly. I mean, that's how you really maximize success in a rent-to-own program. It's the legwork has to be done up front, because there are enough things that can happen over the course of a couple of years. But to mitigate that, you make sure that you're qualified properly. You're in a house that you like and that you were active in selecting.
Yeah.
And if you can do those things, then your chances of success are high. And as I said, we're not in the business of putting people in positions where they can fail. We're here to make you into a homeowner as quickly as we can, and most importantly, as comfortably as we can. On that point, I would just say that we don't want people to have to break the bank in order to make a rent-to-own situation work.
Yeah.
You still have to be able to maintain your lifestyle. Of course, there may be some sacrifices that have to be made, but there's no sense in entering a rent-to-own if it's going to put you, if you're living off credit cards for a few years in order to make it work, because it's not in your best interest.
Yeah, that's a really good way to lay it out. I joke around with my clients all the time saying, a bank will qualify you to purchase a house of this value, and let's say it's $600,000, and people are like, "Whoa, I can afford that." And like, no, not that you can afford it.
Yes.
Bank doesn't care if you ever take a holiday in your life, you ever go out for dinner, as long as you're paying interest, right?
That's right.
Where in your case, you're actually making sure these people can have a life as well.
Exactly. So part of our qualification process before rent-own, during, and even we set up expectations for after the rent-own is completed, is looking at your monthly budget and really delving deep into it and making sure that not only can you afford that house today, can you afford that house in 3 years, 5 years when the mortgage is yours, and if anything happens over the course of that time. A lot of young people are looking at rent-own. Well, if you're planning on having a child in the next few years and your income might drop, can your budget sustain that? So we look at some we look at some different scenarios with people to make sure that they're well positioned for success in a rent-own situation and a home ownership situation altogether.
That's funny because even through CMHC or the banks, a couple can come to me and they can have 18 kids, and it's no harder for them to qualify than a couple with no kids. And yet we know, kids are expensive.
Yeah, that's right. Yes.
So what would the average term be? Like, how long would somebody get into a rent-to-own agreement?
That's a good question. We get that a lot. So typically a rent-to-own term is anywhere between 2 and 4 years.
Okay.
Now the length of term is based on a couple of factors. One, probably the most important factor, is how much down payment do you have to start with. Now, a down payment is required to maximize your success in a rent-to-own.
Okay.
I'd always be wary of rent-to-own scenarios that are offering a no money down sort of thing. And I'll explain to you why. Let's say, in order to get a conventional mortgage, you need to come to the lender with $30,000 for a down payment, but you only have $5,000 today. Okay.
Right. Okay.
In a rent-to-own term, let's say we want to get you there within 3 years, so that's 36 months. You've got to now save $25,000 over 36 months. Now, I don't have the quick math on me, but it's probably around $800-900 a month that you've got to save on top of your rent, on top of your utilities, on top of your living expenses. And for a lot of people, their budget can't handle that.
Yeah.
So it's very important that you factor that into the length of the term. Now, that's why I say having a sizable down payment is important, because the more you have to begin with, the less you have to force save over the course of the rent-to-own term. So the way to look at the rent-to-own term is it's not a whole lot different to what some renters may be doing presently. You know, you're in a rent-to-own, you're still paying rent as a traditional tenant would. The main difference is you're living in the house that you'll eventually own, which you were active in selecting. So you have that to sort of light at the end of the tunnel, and you're in a forced savings program. So you're paying the investor the rent, and then in a separate payment you're paying a down payment savings portion, which is added to the initial down payment you put down to enter the rent home. Okay,
so there's no premium, as in the rent is any more than what rent would be, but there would be a slight premium which goes into a savings account to help build you up your down payment.
It goes towards your down payment, exactly.
Okay. So now, you mentioned different homes with qualifications. What type of homes do you mean by that?
Sure. Well, as I said, you as a potential rent-to-own buyer, you in our program are active in selecting the home that you're eventually going to live in, rent, and then purchase. So it's nice because you know, if you're going to be the one living in the house and you're going to be the one eventually owning it, you might as well be involved in picking it out and making sure you enjoy it and like it. Now, having said that, there are some, because there is an investor that is taking a risk to some extent in taking on you as a rent-to-own client, they've got to make that purchase of the property. So they do have some say in what the property is going to be as well. For the most part, it's fairly flexible, but there are some types of properties that are a little more challenging to get the investor to put their money down on. So
I guess
those properties would include, you know, very rural properties or farm properties. Those ones are tough. Anything with well and septic can be challenging. And it's not that they're completely ruled out, it's just they're a little more challenging, and the investor pool becomes a lot more limited in properties like that.
So I guess like most lenders, they want to see a property that's more marketable, you know, downtown, wherever, Orangeville, Bolton, you know, anywhere where there's more houses around, they tend to like that a little more.
You just have to remember that they're mitigating their own risk as well. I mean, they're invested in your success. They obviously want you to succeed as a rent-to-own tenant. But they've got to make sure that their bases are covered as well. And that's more where I would come in as a rent-to-own specialist, is to make sure that you as the rent-to-own client, your interests are protected as well as the investors, and sort of matching that up to make sure that the whole process runs smoothly.
Okay, well, one question I'm going to come back with is, what if someone just has too much debt load to carry all their expenses? So we'll be right back. Stay tuned.